If this June cycle is going to be Moass, you want to have multiple different brokerages to shoot at it because counterparty risk is massive. And we saw last year that there was humongous counterparty risk in certain brokerages. Justin, what today are you doing to protect yourself?
Absolutely. Big fan of Fidelity myself, but moving off Fidelity, still keeping my Fidelity account, but branching out. The reason why someone might want to do this is they might be perfectly happy with the broker they've had. They might not have had any issues at all, right? And hopefully that remains to be the case. But you never know what the future is going to hold. Again, consider what happened January 2021. If you have a market event and everyone's mad, rushing, and love hugging their broker, the brokerage, it might be slow, it might go down, and through no fault of crime, no fault of shenanigans, anything like that. So one way you can kind of mitigate that is, let's say, for example, you take your position and let's say you divide it up between multiple brokers. The ones that strike me as being the most logical if you want to hedge your counterparty risk are the big, boring, boomer brokerages. So Fidelity I already mentioned, but you've got your Schwabs, you've got your Vanguard, the uber boomer brokerage, and I guess to an extent IBKR, which kind of like straddles the line, I would say, between the the Gen X and the boomers. Lastly, I'll give a hat tip to Webull, but there's one thing I don't like about Webull. More on that in a second. Josh, the big thing that I like about the Fidelities, Schwab, Vanguard, and IBKR is that they're self-clearing. They don't use a third-party clearinghouse, which is what Robinhood did, which is what Webull does. It's not necessarily an indictment of the brokerage, but it is just one more failure point. If memory serves, I think it was actually the clearinghouse Apex that called Robinhood and said, "Hey guys, listen, if you want us to continue to trade, or if you want to continue to trade, you have to put more capital up with us." And that's ultimately, led to the buy button being shut off. If you're self-clearing, again, as I poorly understand it, you have to have much more capital on hand. And again, just to be clear, the Fidelities, the Schwab, the Vanguards, and IBKR. I mean, these guys have the firepower in order to make that happen. And the thing is that, like, let's just say, like, one of these brokerages goes down, or worse yet, let's say one of the, the data providers, something happens. The market's really moving, panicked, or whatever, greed's abounding. If you have spread around your position with multiple brokers, I'm not saying open like 10, 20 accounts, but maybe you have like 2, maybe 3 alternative brokers that you can trade with, then that might be an edge you have, because if one broker goes down and you're trying to get a trade through, okay, yeah, that's going to suck, but hey, you just have 2 other, as I'm fond of saying, you've got 2 other bullets in the chamber to shoot at the problem. So in my case, I typically tend to gravitate towards the boring old boomer brokerages. I will give a big hat tip to Webull in the sense that, Josh, you actually turned me on to this, the interface. Those guys are slick. The only thing that turns me off against Webull is that Apex is behind, or is that they use Apex behind the scenes, and also that they're Chinese owned. Nothing against the Chinese, but like I don't know. Given the current geopolitical landscape,
Yeah, personally,
yeah.
I use Webull, but I have opened up many brokerages because what happens if Moass does start to kick off? First off, you will have a too much cash problem. And if that happens, you don't want to have your entire net worth in one brokerage because people think that, oh, I have, let's say, $1 million in my bank account. That is my money. No, you are owed $1 million by the bank. It's the same way from your brokerage. If you have $1 million in Webull owes you $1 million. So if they go bust, that is now on your ass. And FDIC only secures up to 250,000 of that.
Yeah, actually, this would be a SIPC is what it would be. Actually, I think it goes up a little bit more than that, but like it gets really, really weird. Like if this thing goes up,
you want to have the fungibility to transfer that over to many different brokerages. So I've opened one with Fidelity, TD Ameritrade, Interactive Brokers, just so if you ever need the situation, you can move those shares over. That is pretty much to limit your counterparty risk as much as humanly possible. Thank you.
Yeah.
See you on the next.